Hello there, my name is Louis Wieland, and I'm a commercial realtor with KW Commercial, and I also publish Community Profiles magazines that are distributed by the First Multiple Listing Service of Atlanta. The magazines are on the First Multiple Listing Service website, which is viewed by over 400,000 agents throughout the country now. And the First Multiple Listing Service now has listings in California, Tennessee, Alabama, Colorado, and other cities around the country, soon to be adding Chicago, I understand. So basically, it is the third largest multiple listing service in the United States. The magazines are available in all of the real estate brokerage firms. There are 4 different versions, one for Atlanta, one for Cobb, one for North Fulton, one for Gwinnett. And they are on the First Multiple Listing Service website, so agents throughout the country pretty much have access to those. The website is atlantacommunityprofiles.com, and the magazines are also on that website. They are also sent out to agents every couple of weeks so that they can in turn forward them to their clients. And we just interviewed the president of FMLS a few minutes ago, and we're told that as of now, if you're a commercial agent and you have listings and you put them on FMLS, they will automatically be added to Crexi at no extra charge to you. I know I spend about $300 a month on Crexi, so it will be a big savings to commercial agents to have your listings on FMLS. So basically, you have to be an agent, obviously, to access the First Multiple Listing Service website. But if you are, you will see all of the commercial listings on that site as well. FMLS does offer training on the FMLS site for commercial listings, as well as on the Crexi site for the listings. So anyway, every week or so we interview community leaders, community and business leaders, and people who are contributing to the well-being of our metro area. And today it's my pleasure to once again interview an old friend, Michael Sims, market executive at Georgia's Own Credit Union. And Michael's been on the show in the past in a different capacity. Michael, welcome to the show. Nice to have you back.
Thank you, Lou. Appreciate it. It's been too long, so thank you for the invite to come back and catch up.
Good. I appreciate your time. I know you're busy. Michael is now functioning as a market executive for Georgia's Own Credit Union, and previous to that, he was the executive vice president of Vinings Bank, and in that capacity, he was on the show a few years ago. Prior to that, he was executive vice president of State Bank and Trust, and before that, executive vice president of SunTrust. So he's somebody who's an expert for sure in this space of commercial and commercial investing and commercial banking. And he has a degree from the University of Alabama and an MBA from Stanford at the Brock School of Business. So I will ask Mike to give us we're going to learn a lot about not only Georgia's Own Credit Union, but also about credit unions in general and some of the benefits that they offer relative to regular, normal commercial and banking institutions. What I know for sure about Georgia's Own Credit Union is that they have 40 branch locations throughout the state, and most of which are in the metro area. including Alpharetta, downtown, Duluth, Roswell, Dunwoody, etc. So, Michael, let's just start with giving us a profile of Georgia's own credit union from just a macro standpoint, and then we'll graduate into a topic of what is the difference, or maybe it'll be included in your definition, of a credit union versus a normal banking institution.
Yes, certain, Lou. So first and foremost, Georgia's credit union is 90 years old this year. The credit union started back in 1934 as Atlanta Telco. And so it was a group of telco employees who got together and wanted to be able to help each other out by forming a financial institution that would allow them and their members to come in and borrow money for any kind of needs that they might have, both on the personal and or the business side, and also provide them with a banking platform. And so the organization has obviously grown and been around for a number of years and morphed over time from a name perspective. And today we're known as Georgia's own credit union. We're about a little under $4.5 billion from an asset size perspective. As you mentioned, the number of branch locations that we have across the state of Georgia. We do business in most all of the contiguous 48 states across the United States. So we have the ability to memberize, if you will, individuals and or businesses across all of the states across the United States, and kind of a pleasure to be able to do business with folks in that regard. From a banking perspective, there's really not a lot of differences between us and a traditional traditional bank. We provide commercial services. That's what I help lead for the organization as a whole. And then obviously a full product spectrum on the consumer side, from mortgages to HELOCs to car loans to et cetera, all sorts of banking platform on both the personal banking side as well as from a commercial on the treasury platform side. So what we bring to our member base, and that's where we'll get into the differences between a financial institution, a bank, traditional bank, and a credit union, is really the same product offering that you would find at any traditional banking franchise. We'll talk a little bit about the differences real quick, and then you can ask me anything for in-depth question on that. But the primary difference between a traditional bank and a credit union has to do with ownership of that institution. As a credit union, we are a not-for-profit. So our members are our owners. And so any and all net income that is generated by our organization through our banking activities is then turned around and provided in the form of benefits associated with lower rates on loans, hopefully higher rates on deposits to our member base. So we make all of our decisions, financial and otherwise, in support of that member base. A banking franchise, and you just mentioned my background. I've been in the banking space probably 35 or so years, all of it with traditional financial banking franchises. And all of those are shareholder-based organizations, right? So someone's invested their funds into that bank and they expect a return on those funds. So any profit that is made by the bank is then returned to those shareholders, right? Whether they be publicly traded or whether they be privately held. So the motivations, at least from my perspective, of the organizations between a bank and a credit union are a little bit different. So we're making decisions on behalf of our member base that have their loans and deposits and do their banking with us. And a bank traditionally is going to be making their financial decisions on payback to a shareholder, right? So they're governed by the desires and demands of that shareholder base. Nothing wrong with either of the two options, just a little bit difference in those and how they operate. But from a product offering, go-to-market strategy perspective, what we do on a day-to-day basis for our members is literally exactly the same as a traditional banking franchise would provide.
What about, is there any difference in loan terms between the two?
There's really not on the commercial side, Lou. If you were to ask me, so remember you just mentioned that I was with Vinings Bank most recently, and Georgia's Own purchased my bank, Vinings Bank. And so all of my commercial banking teammates, both commercial as well as SBA, have transitioned into Georgia's Own. And we're doing the exact same thing today that we were doing just under 2 years ago when that acquisition took place in November of 2022. So you should see really no difference on the commercial side from terms and conditions that we can offer our member base, our business member base out there. We're not restricted in any form or fashion with regard to terms. It's obviously just a credit appetite decision that we make, just like any other financial institution.
And you are in other locations outside of the state of Georgia. You mentioned that you are.
We do business with members who reside outside of the state of Georgia, so we don't have any physical footprint. All of our branches are located in the state of Georgia, but we do have members, again, across most all of the 48 contiguous states.
Okay. So basically, if I were to say to you, Michael, I'm thinking about getting a loan from Bank of America to buy say a 25-unit apartment building.
Yes, sir.
What would be the process to go through to work with you on that project?
Yeah, it would be exactly similar as to what your experience might have been with traditional financial institutions. So I'm going to talk to you about the project. What's the price? What's the price point? What are your expectations from a return perspective? What are the credit fundamentals, the financial fundamentals of that particular project? What does the debt service coverage look like based on the terms and conditions that you would want from the leverage that you want to put on the property? And you and I would come to an understanding as to what the most appropriate structure would be for that income producing property that you're wanting to purchase. So the dialogue, the conversation, the data needs, the requirements, the structure is going to be very similar to what you would find at traditional banks.
What about my experience has been, and feedback that I've received from other commercial agents, is that the down payments are higher now, partly based on some people's paradigm on the state of the economy. What is the true reality on that from your perspective?
Yeah, I think there's probably some truth to that, Lou. But I think the drivers are really the difference, and you'll be familiar with this. We've had a really nice run up in valuations of income producing property, multifamily and otherwise. Rental rates have gone up. I see them moderating a little bit at this point in time, depending on location, right? Location is always the first driver of everything. But what I have seen is the need for additional equity into those projects, primarily because the price points are such that the fundamentals of the rental rates, et cetera, demand that you have additional equity kicked in this thing in order for your debt service coverage ratios to work, just because the price points of the projects, notwithstanding here recently, have increased so much, and you actually require almost 100%, 90% occupancy, 95% occupancy at rental rates that are pushing the envelope. And so what I see with investors who are getting into that space is when I try and put leverage on it, a lot of times because of the price point, it just doesn't pencil out from a debt service coverage perspective. And so in order to be able to make the terms work, it's going to require additional equity to be kicked in.
What would you just briefly define a 1031 exchange and how large a segment of the market that constitutes, and are there any trends in that field?
Yeah. So 1031 exchange. You're an investor. You own a piece of property, and someone's come and said, hey, they want that property more than you, and they make a nice offer on it, and so you sell that property, and you have some profit that you're making on that property that you sold based on the basis that you have in that project. And so you take those excess proceeds, and rather than paying Uncle Sam capital gains on that particular project, you take those dollars and you find another investment opportunity in which you can inject those proceeds in a tax-free situation to be able to buy that next property and kind of roll over your profits, if you will, into the new investment. It's a very popular structure. I think I've seen more of those type transactions in the last 24 months or so, just because, again, valuations have been driven up from a price point perspective. And so I think folks were taking opportunity to sell at what they think the height of the market is, and then let me go find another opportunity where I think I can generate some value, and I will keep those tax dollars away from at least Uncle Sam in the short term and put it into the new property that I'm purchasing.
Now the tricky part is the timing in terms of between the time that you sell and the time that you buy.
Yes, sir.
And explain how that works.
Yeah, I'm not going to be your expert on those, Lou, but I understand you've got a 6-month period of time for you to be able to identify the target property that you're going after and get that target property under contract and closed in that 6-month period of time in order for you to be able to transition those dollars to the new property in a tax-free manner. There are likely other avenues that are underneath the 1031 exchange that would give you additional time. I know there's some where you do a development loan associated with it, maybe some construction, and that gives you a little bit longer period of time to be able to find those target properties. But generally speaking, at least from my understanding, is you got 6 months in order to affect that transaction.
Now, do you recommend 1031 professionals, or do you have 1031 professionals at the bank, or how?
Don't have any at George's Own, but do work with several that are local here in the Atlanta space. And the first one that comes to mind that I use quite frequently is Ron Rates over at ADE, and that's Atlanta Deferred Exchange. They do a very nice job, and I've worked with Ron and his team on a number of transactions.
How can people get a hold of him? Do you have his email or contact information?
I'd be happy if any of your listeners out there wanted to get in touch with Ron. I'd be happy to provide his contact information.
So your email is, what is your email? So if they want to.
Yeah, it's mssims at georgesown.org. So MSSIMS at georgesown.org.
And what about cap rates? What is going on with cap rates now, with the interest rates being what they are? And I understand just an announcement came out today that there will be one decrease between now and the end of the year. How's that going to affect prices and cap rates, et cetera?
Sure. Yeah. So cap rates are an interesting conversation. I think you can ask 10 people, you're going to get 10 different thought processes on cap rates. And the first thing I would tell you is they certainly, in my mind, they differ by sector, right? So whether or not you're in industrial space, or if you're not in for income producing or other sectors of the marketplace, they're going to certainly differ by those various verticals. And what I've seen is a moderation of those cap rates over the last 24 months, primarily because of the cost of debt that we've got going on out there in the marketplace with the rise in interest rates. And I agree with you. I read something, Wall Street Journal, I think it was last night or the night before, that the Fed is now targeting at least one rate decrease. I heard September was kind of the time frame, and so I think that'll be good for us. I think they're seeing numbers in the employment world that are scaring them a little bit. So employment's increasing a little bit, and inflation continues to be moderate. I think I saw something about 2.6 versus a 4 number year over year. So obviously the rate increases have done what they wanted to do, and so now I think they're getting a little bit worried about what the employment rate looks like. And so I actually like a little bit of a rate decrease because I think that's going to spur some investment.
What about the office category? And that's been troubled, and doesn't look like a whole lot of relief in sight. Are you pretty leery of loaning money on the office category of office?
Yes, sir. I'll categorize it or qualify it by saying if it's a large office complex, I would probably have, and probably most financial institutions today would have probably little appetite for those. If it's an owner-managed office space where they're going to utilize some portion of it, and then they may have some others that they need to lease out as part of that, I'm going to be relying upon that owner-occupied space to be able to repay our debt should they want to put some debt on it. So I'm a little leery of that. The biggest thing that worries me in the office space, Lou, and I'm sure you're familiar with this, there's about $1.3 trillion of debt in the office space, whether it be CMBS market or other bank debt, that has a maturity over the next 24 months. And so if they had fixed rates structures associated with that debt at the time that they put it on, unless we see a really significant moderation in rates over the next 18 to 24 months, there's going to be a pretty large wake-up call on those office complexes that have this large debt refinancing activity that's out there. One, I think they'll have a hard time in finding banks that want to play in that space unless things change dramatically. And then if they do find somebody, the rate shock's going to be pretty material there. So I'm not very bullish on the office space right now, large office space.
There will be most likely a big decrease in price for the category of office, and
I agree.
Even then, it would be hard to get financing because of the demand. So something has to be done with that industry to make major changes in the entire kind of profile of the industry, really.
I think that's exactly right. And especially as larger companies, even ourselves, the vast majority of our workforce here at Georgia's Own has a virtual option available for them to work in their particular roles. And I see that going to continue for large organizations. And so I just don't know. I'm not smart enough to know what that office sector looks like 2 years from now.
It will be different for sure, though.
Yeah.
The whole complexion of the space.
And just for that reason alone, it just gives me pause as to whether or not we want to play in that space from a leverage perspective.
Right. And that doesn't really apply to the multifamily space.
No, sir, it does not.
How is that different now? Explain some of the benefits, some of the values in that space.
Yeah, that's been a really hot sector, as you know, at least here in the Atlanta space, right? Again, location. It's been a really good sector. Values have certainly increased. The rental income opportunities have increased. I think there's been a lot of, at least my client base, that's benefited from investing in that particular space. And so I continue to see that. I still think there's, in various locations inside of Atlanta, there's still a shortage. And so there's still a need for multifamily development to take place.
Well, in the state of Georgia, and particularly the metro area, a lot of new companies are moving here, and even up 75, up 85, and down into south of town, even really with new industries, manufacturing especially. How do you think that will increase the demand for multifamily and the values to investors?
Yeah. Again, I'm going to go back to the location piece. I think there's, if you look inside the perimeter, the game plan right now is to find infill wherever you can find it, and prices are pretty healthy. Land's very expensive, and you've got to maximize what you can put on that particular footprint. And if you can do that, I think you can pencil out your numbers as you move out into the outer parts of Atlanta, MSA. I think that opportunity moderates to some extent, except for some pockets out there that are still very that are thriving, and there's a lot of local investments that's going into the local neighborhoods. Local municipalities are doing a really nice job of creating these little live, work, play spaces, and I think that'll continue to drive the need for multifamily in those kind of locations.
I mean, the manufacturing industry itself is growing in the state of Georgia. We're becoming a much larger manufacturing site, especially, like I say, up and outside of the metro area. Obviously, it's not in the metro area, but certainly up 75 and 85, down even up to South Carolina and up to Tennessee.
Yes, sir.
Going down farther down to Alabama and Florida. So there's a lot. There's a lot of available land, even in the city of South Fulton.
Yes, sir.
Had the mayor of South Fulton on the show the other day, and they have a lot of space available too. So, are you looking at that how does that? You get many people coming to you with ideas on that land? They have, I think it's like 60% of the land in South Fulton is available for right now, is vacant. Yeah,
I actually had a couple of my clients who have just finished up in projects in the city of South Fulton. Had a really nice experience down there, did very well. It was all on the single family residential side. And the city, as you just mentioned, very receptive. They see the growth opportunity, especially to provide low to moderate workforce type housing in those locations, which makes great sense. And I agree with you. There is a lot of manufacturing that is being built, out 20, but going both ways, and certainly up 75, up 85. My experience there is these manufacturing plants that are coming in, especially if they're larger ones, like for example, the Kia plants and et cetera. I see them having joint ventures with local developers in order to provide housing for the employees that they need to hire, and they want to have them right there by their facility. And so I do think Atlanta does a really nice job of promoting the ability for manufacturers to come into our state, find land, but then also find workforce that is ready, available, and willing to work here. And so I agree with you. I think that will be a driver for the state of Georgia on a go-forward basis, which is nice. That's a good thing to have.
Do you work with them and those two parties to provide financing and mortgages for that? Are you a partner in that kind of a synergy?
Well, we certainly would be if there was an opportunity for us to play both on the commercial side, but then you also mentioned on the mortgage side, because as you know, credit union, in particular Georgia's own credit union, we are a significant provider of home mortgages for personal residences. So if there was somebody out there that was wanting to put a package together that would combine both what we could do on the personal side, mortgage as well as on the commercial side for acquisition and development, we would that would be right up our alley from a a banking on purpose perspective, which is, kind of our mission statement as from an organization perspective.
There's been a big a disappearance of spec homes in the home building industry. And
Yeah.
how does that affect your business? And to what degree do they work with you in that field?
Yeah, that is, you're exactly right. I've seen a pretty significant moderation in the spec building space. Most of the time, Lou, what we'll do is work with a builder, whether they be a small to medium sized builder or some of the larger tract home builders. And inside of our structure with them, we would put a limit on the number of spec homes that they could have inside of their construction process ongoing at any given time. So we would allow them to do some number of spec homes. Then we'd want those to sell through. We'd want that inventory to sell through before you release the ability for them to do additional spec homes. So that having spec housing and from a banking perspective is probably one of the more risky profiles that we would be part of, but certainly work in that space. But we would have some moderation or some governors on the number of spec homes that they could have going at any one point in time.
Give us a paradigm on the land as a status of availability and the potential for improved values. What kind of advice would you want to give to home builders and commercial developers on the land industry right now?
Yeah, well, you've heard me say it. It's probably too many times already, but location is just key. To me, it just drives usability of the property. I'm not seeing folks that are wanting to go out and buy property that's in a distance from developments and or where the metro Atlanta area is growing as a whole. And banks really and credit unions don't have a lot of interest in following those kind of projects. And so for me, if I'm talking with somebody who's interested in the land side, my first question is what's going on around you and where do you see the area that you're buying the land? Where do you see it in the next 5 years from a development perspective? And does the game plan that you're putting in place, does it mesh with what the future looks like for that particular area? And if you can marry those two up, I think land, purchase of land, I call it speculation, makes a great deal of sense. But I do think you've got to have some patience in that to make sure that what you're wanting to happen does come to fruition for the property that you're purchasing.
The planning departments of the, for example, Cobb County Planning Board and Gwinnett County Planning Board do offer information on future land use. So I would advise everybody to stay in close touch with the planning and development departments, et cetera, of the counties and cities.
Yeah.
And check those future land use plans because they do.
Yeah, I think that's really good advice, Lou. And I'd add to that you know this probably far better than I. What a piece of land can be used for today, or maybe should be used for today, in the eyes and the minds of the city leaders, can certainly change over time and can probably change and sometimes change pretty quickly on you. So I would also be very mindful of I'll call it the political climate of that particular municipality as to their receptivity of changes in land use and where they're going from a city perspective.
It's very important to work with a broker too, because as a broker, we do try to stay in close touch with these planning development departments
Sure.
of the various counties and cities to stay on top of future thinking, their planning, and we do have relationships whereby we exchange information and try to be on top of it for the benefit of our clients.
Yeah, super advice there. I agree with that.
So be sure and work with a broker who's knowledgeable, because land is a highly specialized field.
Yeah.
And it's radically different from a lot of other forms of commercial real estate. So, Mike, what other kind of information would you like to share with real estate agents? A lot of people who are listening are watching our agents. What kind of information would you like to share with them about the state of the commercial real estate industry right now?
Well, I would be, it would not be appropriate for me to tell you and your experts the state of the commercial real estate broker business, but what I can tell or share with you and with your brethren out there is, from a Georgia's own perspective, if you have the needs, folks who have the desire to get involved in commercial building, whatever the case may be, income producing property, et cetera, Georgia's Own would be here to help and discuss what those opportunities might be for you. We're very focused in building our commercial line of business, which includes obviously the income producing side, owner development side, et cetera, et cetera. And I'd be happy to talk with anybody, any of your folks out there, on opportunities that may present themselves, and hopefully we can find a mutually beneficial situation for both the credit union and as well as for your client base.
Well, that's great to know. And again, could you please give us your contact information over there so we can give you a buzz or shoot you an email and maybe arrange a meeting appointment with you?
So email is MSSIMS, so MSSIMS at georgiasown.org. And then you can certainly ring me on my cell phone, which is 404-735-6553, 404-735-6553. I'd be happy to be my pleasure, actually, to chit-chat with you.
Thank you, Michael. That's very important and valuable to know. Appreciate your ability or willingness to meet with us and go through different scenarios of mortgages for different real types of property. And by the way, don't forget that news coming out tomorrow that if you're a commercial agent, you put your listings on First Multiple Listing Service, they will automatically be placed onto Crexi at no charge, which is huge, phenomenal. And FMLS does have 400,000 agents throughout the country, from California to Atlanta, in selected cities, and Chicago is coming soon. But certainly in Florida, Alabama, Tennessee, Georgia, etc., Colorado. So be sure to consider that. And I know that the people at FMLS will be more than happy to explain how that will benefit you. And there is no charge, by the way, to put your listings on there. Obviously, at closing, you do have a fee. But anyway, thank you very much, Mike, for being on the show. I appreciate that, and would love to have you back on the show from time to time as developments occur in our industry, which is pretty fast moving.
Sure.
Especially with the interest rates coming and how that'll impact everything. Thank you for watching, and again, if I can help you with any of your real estate needs, my email is louwieland@kw.com. Thank you very much for watching, and have a nice day.
Thank you, Lou.